Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session of economy this week, wherein we are going to take up all the important economy related articles which have appeared in various business related newspapers from 19th to 25th November 2022, and we'll be analyzing these articles. Let's begin the discussion. The first article is regarding central government proposing standards for e-commerce reviews. Now, what is the idea all about? Let me start with a very simple example. Imagine you want to purchase a product either through Flipkart or Amazon, doesn't matter, or you want to order certain food on an app. Generally, the behavior of the buyers or the consumers is that we'll go to the app, we will search for certain products, and before we place an order, either we will look at how many stars the product has reviewed or how many stars the product has received and the kind of reviews the product has been provided. Many of you, when you decide to buy a book or let's say a mobile or a gadget through Amazon or a Flipkart, many of you, just like me, you will go through the reviews which are put by the customers or other buyers, and based on that, many of the times will decide either to buy the product or to buy the product from somewhere else rather than ordering through the app. Now here is my question. How will you come to know whether the reviews that you people are reading or am I reading, what is the guarantee that these are not fake reviews, these are the genuine reviews? Because if there are 100 reviewers, what if most of them are fake reviewers? The company which is selling the product itself has created those reviews. Don't you think in that case, you as a customer or I as a customer has been misled? In order to address all these issues which are created by the fake reviews, now the government of India, that is specifically the Department of Consumer Affairs, says that henceforth there will be a process which will be regulated or which will be regulating the e-commerce reviews. Although I have written the term e-commerce here, please understand, these guidelines after a certain period of time will become mandatory for all the businesses which are selling the product or services online. For example, Flipkart, Amazon or Meesho for that matter, or Swiggy, Zomato. So it is not just limited to the purchasing of goods online, it will be spread to all the service providers or all the goods providers who are using the digital platform to sell the products to you. Now, what are the standards which have been proposed here? One, to begin with, as already mentioned, to begin with, this will be an optional phase. That is, it is optional for the service providers or the e-commerce companies. But after a certain period of time, it will be made mandatory. Now, many of you simply say, sir, why? Why to begin with it is optional, then make it mandatory? Why not start with mandatory process itself? The government says that to begin with, we are making it optional because we want to ensure that whatever issues are there, whatever hurdles are there, or whatever issues we will face after the implementation, we are going to address all of it, then make it mandatory. Just for sake of understanding, imagine a scheme is being implemented by the government. What do you think is better? Implementing at all India level, then realizing there is certain issue with the scheme, trying to address it, or initially launching a pilot phase, trying to understand what could be the issues later when it is expanded to all India, address it, then expand it to all India. Many of the times you must have heard of pilot phase, pilot issue, etc. like this. Same thing is being done by the government. So first thing, it's not compulsory to begin with, it is optional. But now, imagine you want to differentiate, you want to distinguish between those companies which have adopted the standards and those which have not adopted the standard. In this regard only, government says, that is Bureau of Indian Standards, BIS, the Bureau of Indian Standards says, we will bring in a new system wherein you can find out whether the sellers or the service providers have they adopted this model or not, right? Are they following this model or not? Now third, now when I say this model, what is the meaning of it? Imagine you are the seller, you are offering a product, I am a buyer, I want to provide a review for the product. As of now, there is no mandatory procedure like this. Now the process will be implemented. What is the process? If I want to place a review of a product, I'll have to provide my complete details, I'll have to provide my mobile number, email ID, location, etc. And using that, once I provide the review, you will ascertain, you will find out whether the customer who has provided the feedback, whether it is a genuine customer or a fake customer. And that process, whatever you are following, on what basis the rating has been provided, right, what methodology has been followed by you, that is the company, you will have to disclose it to the government. Now, what if you don't follow? In simple terms, if you violate any of these provisions, what will happen? Government of India says, if you don't follow the provisions, then you can be held in contempt. In simple terms, it simply means you are not abiding by these guidelines and you can be held in violation of trade practices, or you might be held as seen to be following unfair trade practices and you can be punished for it. So these are certain very important points. Next important point, that is the fourth important point. Imagine you are a customer, you find out that there is a fake review. There is basically something wrong with the product. You went with the review, you order the product, but when you receive the product, you realize that, okay, what the reviews are saying does not match with what is your personal experience with the product. In that case, what is the recourse? Now, these guidelines say that if a customer finds out that there is a grievance, or if a customer has a grievance or a complaint regarding this process, they can file the grievances at National Consumer Helpline, Consumer Mission or the CCPA against such misleading reviews or the fake reviews. So these are certain very important points regarding the new proposal that has been put forward to address the menace of fake reviews. Now, based on this, I have given an MCQ here. Consider the following regarding online consumer reviews, principles and requirements. That is, this is the name of the title of the guidelines which have been announced by the government here. Indian Standards ISO 19000:2022, online consumer reviews, principles and requirements for their collection, moderation and publication. Very lengthy name, but I have shortened it. I am asking a question on that. These have been framed by the Ministry of Commerce. Answer is wrong. Ministry of Consumer Affairs. These are applicable to only the companies involved in the online sales of goods. No, even the services will be included here. So both the statements are wrong. Right option will be option D. Option D, neither 1 nor 2. Right? Again, option C is not correct. Option C is both 1 and 2 are correct. No, both 1 and 2 statements are wrong. Right option will be option D, neither 1 nor 2. Let me go to the next article. Unnati project or Unnati scheme. Government of India, right, go by a lot of information given in the article itself, go by that information. Government of India launched Unnati project in the year 2020 and the objective was very simple. Many of the people who are completely dependent or heavily dependent on the MGNREGS scheme, Mahatma Gandhi National Rural Employment Guarantee Act or Guarantee Scheme. We want to reduce the dependence of these households on this scheme, one, and second, we want to ensure that the people who are dependent on these schemes, at least one person from every household, one person will be taken, trained or that is skilled, and ensure that this person will be able to get access to the skilling and get a job in the market. Now, why this is important? If a household has, let's say, earned 100 days of wages under MGNREGA scheme, it simply means the dependence of the household on the scheme is very high. And the problem is, if you are going to provide only 100 days of work for this household or this person, don't you think for the majority period of the time in the year, he doesn't have any job, he doesn't have any wages, etc. In order to ensure that from partial employment, from the partial concept of employment, the person will be skilled and will get a job, that is a full employment or complete employment, the objective was that under the Unnati project. And the government says, will identify those households which are using, let's say, 100 days of labor days under the MGNREGA, and at least 20% will be chosen, and we are going to provide the training for one person in these households and ensure that he'll be able or she'll be able to get a full-time job in the market. Now, this was announced by the central government, was supposed to be implemented by the states. Now, what is the status? The government of India says that the implementation of this scheme is lagging behind. Very, very poor performance of the scheme. There's a reason for this. I'll come to that later. But as per the data which is given here, you can have a look at the data here. In 2021, 71 lakh households worked under MGNREGA, and the number of people who are provided with the skilling under the Unnati project was 8,658 people. And for the next financial year, 21 and 22, the number of households dependent on MGNREGA changed to 59 lakh people, 59 lakh households, and the number of persons who are trained under Unnati project increased to 12,577. Even if you take the calculator, here itself you can understand it. Even if you take a calculator and calculate it, you will realize that although the target was 20%, in these two situations, it is much lower than 1%. So the argument that is being put forward by the government of India is that though there is a provision for Unnati project, the states which are supposed to implement this are not implementing in a correct way. In fact, under this project, government also made a provision wherein a person who is selected or is supposed to get trained under Unnati project, the wages will be provided during the training period. It's not that the person will be losing the wage days. The wages, whatever wages were provided under MGNREGA, same amount of wages would be provided even under Unnati project. So despite implementing the scheme or announcement of the scheme by the central government, the implementation has been very poor. And that's a precise reason. What the government now says is, the central government for the next financial year, that is when the budget will be announced for the next financial year, the Ministry of Labour says that the labour budget will be considered, and whenever the funds are allocated to states, I repeat, whenever the funds are allocated to the states, there will be certain targets which are given to the states. After achievement of those targets under Unnati project, the funds would be released to the states. So these are certain very important points regarding Unnati scheme. Now based on this, I have given an MCQ. Consider the following regarding Unnati scheme. The project will help beneficiaries transition from partial to permanent employment. Statement 1 is correct. The beneficiaries under this will be given wages during the training period. Second statement is also correct. Right option for the question will be option C, both 1 and 2. Next article, RBI brings GST network under account aggregator framework. Important one. Now first and foremost, what is the GST network? Imagine you go to a restaurant, you go to a hotel, you go to any shop. Generally, you'll see a board being displayed by the shopkeeper or let's say the owner of the restaurant, whatever it is, that is business place. They will write a GST registration number. They will display a board, a GST registration number. And in fact, many of you will say, sir, I've never seen such a board. Doesn't matter. You must have certain bills with you. Either when you ate food in a restaurant, you will have a bill. You purchase clothes from the shop, you have a bill. You visited a supermarket, you have a bill. Just open the bill and see, somewhere in the bill they would have written the GST registration number. Now what is this idea? Simple. Government of India, when they were proposing to implement the GST, that's a goods and services tax as a reform, they also felt that there should be an institution, there should be certain authority which should be set up, which will provide the back-end support, back-end infrastructure support for the implementation of GST. Sir, what do you mean by back-end infrastructure support here? For example, imagine you are a trader, you want to be registered under GST. What is the network? Where will you register yourself? You want to file returns, right? There should be certain authority which will conduct analysis of every taxpayer, give the information to the government of India, etc. In order to achieve many of these objectives, Government of India along with many of the private sector entities as well as the state governments set up GST network, GSTN. Now, the latest data says that RBI has classified the GSTN as an account aggregator or under the account aggregator network or framework. And please understand this, RBI has brought it under the framework. It's not an account aggregator, it is basically a financial information provider. What do you mean by this? Imagine here is a company has a different points of financial information. Is it okay? There are different points or there are different data sets which can be utilized as a financial information of a company. So, very difficult to understand. Let's take your own example. You as a customer, you will have a credit card, you have a bank account, you will also have FDs, you have insurance payment, etc. So, these are nothing but the different financial data points for you as a customer of a bank. Now, imagine the bank wants to find out what are the financial transactions that you are involved in. Imagine you have applied for a loan and that bank wants to find out what other types of financial transactions you generally conduct, how much is the type of investments you are doing, etc., etc., etc. In simple terms, all the financial related data of a customer. How can they get it? Right? You have invested in an insurance product of a company. Do you think the company will willingly give you or willingly they will give the information to the bank? They will not agree to it. And in order to address this and ensure that the financial information of all these, right, let's say institutions or the customers or the companies, etc., is available at only one place, the Reserve Bank of India has implemented a system called as account aggregator system. Under the account aggregator system, the GST network will be classified as a financial information provider. Meaning what? A company's financial information can be available in different forms. One such form is the GST filing that the companies have done. Specifically, have a look at this. The GST returns means simply documents. The GST returns which are filed in the form of GSTR1 and GSTR3B will be the financial point of information here, and it will be the duty of the GST network to provide the financial information of a company, right, let's say, right, to the request or whoever or whichever institution has raised the request for this. Of course, certain important points here. It's not willy-nilly that the financial information providers will provide all the financial related information of a customer. Only upon the consent, I repeat, only upon the consent of the customer can such information be provided. It's not without consent. The customer has to provide the consent. Only then such information can be provided to the person or let's say to the institution which has raised the request. That is a basic idea of account aggregator framework. And as per RBI, around 1 billion accounts, 17 banks and 48 non-bank lenders have been enabled on the account aggregator framework. Now, many of you will be thinking, sir, agreed. Whatever points you said, I agree to all of it. But what is the reason? Why is that the GST network has been brought under the account aggregator framework? The argument for that is, if you have, let's say, if you have MSME, micro, small, medium enterprises, many of them find it very difficult to get access to institutional loans because they don't have, let's say, certain data to show to a bank and borrow from the bank. Now, RBI says, when they file the GSTR1 and GSTR3B, those can be taken as a point of data for the bank or let's say for the lenders to provide loans. Again, this is just one data point. This will not decide, but this is one more data point which is available for a bank to decide whether to give loans or not to the MSME sector. This will ease, have a look at this, this will ease in facilitating the flow of the cash to the micro, small and medium enterprises. So, these are certain points regarding GST network. Please be very, very careful. How many of the following are allowed to act as a financial information providers? FIPs, banks, NBFCs, GSTN, insurance companies, all the 4 are allowed. Right option for the question will be D, all the 4. Next article, central government is likely to raise EPFO wages threshold. What do you mean by this? Right now, whenever you are employed, let's say you are employed, full-time employee, and you have a salary, you will have to contribute certain part of the salary under the concept of Employees Provident Fund Organization, EPFO, Employees Provident Fund Organization. Right now the threshold is 15,000 rupees of salary per month. Is it okay? Again, the data is nothing new, it is there in the article itself. Right now the threshold that has been decided by the central government is 15,000 rupees per month. And do all the companies come under this concept of EPFO? Not necessarily. Only those companies which have 20 or more than 20 employees will have to come under the EPFO. There is no option. But what if a company has 15 people, 12 people, that is workers? Are they allowed to come under the EPFO? Of course, yes. They are also allowed, but it is not a compulsion. It's basically they have chosen to be under the EPF. Now, what is the next point here? Whenever a company comes under the EPFO and the employee who has up to 15,000 rupees per month has to compulsorily contribute to the EPFO. That's a very important point. Sir, what if I have more than 15,000 rupees? Of course, yes, you will also have to contribute, but basically because the company is there as a part of EPFO, you are contributing. But an employee having 15,000 rupees up to month, compulsorily they will have to contribute. Earlier, this was 6,000, that is the threshold was 6,500 rupees, and in 2014, this has been increased to 15,000 rupees per month. Now, Government of India has stated, again it's not confirmed, or there is an expectation that Government of India would be increasing this threshold. If it is increased, let's say from 15,000 rupees to 21,000 rupees as stated in the article, I'll repeat. If it is increased from 15,000 rupees to 21,000 rupees per month as stated in the article, one, now the employees will be saving more, or there is one more avenue for the employees to save lot of money post retirement, get access to these funds. And second, more and more number of employees would be brought under the EPFO now, the contribution will suddenly increase. And third, there will be a synergy in the sense at the state level, whenever you talk about ESIC, that is Employees State Insurance Corporation, the threshold that is fixed in case of the state level is 21,000 rupees per month, whereas in case of EPFO, it is only 15,000. Both of them will be brought at par or at the same level. Right, so these are certain very important points regarding the concept of EPFO that is there in the discussion. Whether the government will do it or not, you will have to wait and see. Next important article, Supreme Court of India, that is the new Chief Justice of India, CJI, has announced that there will be a new bench only to handle tax cases. Now, what is the issue here? Imagine you are a taxpayer, I am the government, hypothetically, I am the government, you have paid certain amount of taxes, you are expecting certain refunds, etc., or you are a company, you have paid certain amount of taxes, you are expecting certain returns, whatever it is. There is a dispute between the government as well as the taxpayer, that is the tax authority as well as the taxpayer, there is a dispute between both of them. Now, don't you think if the number of disputes are very high, lot of amount will get stuck up in the system? Simple question, think of it. If there are a lot of disputes between the taxpayer as well as the tax officials or the tax authority, the amount that will get stuck up in the system will be very huge amount, and that will put a burden on the taxpayer also as well as the government plus judiciary as well. In order to address this issue, back in the year 2015, the then Chief Justice of India, right, H.L. Dattu had created a new bench or had set up a bench which would basically handle only the tax cases. And the advantage with that system is simple. This bench, whenever it will take up the cases, they will take up only the tax cases or the tax or dispute cases and will issue orders on the tax cases only. In fact, the success of the bench was so high that in this year, that is more than 200 judgments related to the tax cases were issued, and it also helped in wrapping up or closing more than 500 connected cases, right, for these or which were connected to these tax cases itself. And please understand this, whenever Supreme Court of India issues an order, closes a case, that order has a persuasive value in other arenas also, in other judicial level also. Those judgments can be utilized to dispose of the cases at a much faster pace. And citing this only, the article says that now the Chief Justice of India, right, Dhananjaya Y. Chandrachud, D.Y. Chandrachud has announced that there will be a new SC bench which will take up only the tax cases. And it is expected that with this new bench, the number of tax cases which will be resolved or which will be, right, let's say covered and issued order upon, the number of cases will increase, and this will reduce the burden on the judiciary, reduce the burden on the taxpayer, and equally release a lot of amount which is getting stuck up in the system because there are cases related to that. Right, so this is one more very important point. Now many of you will ask me, sir, where can you write this? Very valid question. Many of you will ask me this question, sir, yes, I understood everything, but where do I write it? Imagine there is a question in the UPSC mains on the concept of, right, reducing the tax disputes. You can use it. Or there is a concept of, let's say, the question on reforms under the taxation. You can use this article. So again, understand this. I don't expect these kind of articles, question on this in the prelims, but definitely yes, in the UPSC mains or essay paper somewhere, you can always use these kind of articles to elaborate on your answer. Next article, important, government bond trade has halved after a glitch has hit an RBI platform. What are they talking about? There are two very important types of articles which are discussed here. One is related to NDS-OM, I will come to that. Second one is banks overnight SDF balances, now RBI says, are eligible under the concept of LCR, liquidity coverage ratio. So that's the reason I'm saying both of them are important. In fact, couple of years ago, there was a question asked in the prelims on the concept of NDS-OM, negotiated dealing system order matching. Now, what is this? Whenever you talk about government bonds, is it okay if I say that government bonds are tradable in nature? Tradable simply means these can be bought and sold. If I have a government bond, I can sell it. If a bank has government bond, they can sell it. If, right, a company, financial institution has a government bond, they can sell it. Banks can purchase it. Other foreign investors can purchase it, etc. Now, what is the point of discussion here? Follow this very carefully. Whenever you are talking about the trading of the government bonds, there is a system, there is a platform which has been set up, NDS-OM, negotiated dealing system order matching, which is operated by the Clearing Corporation of India Limited. I repeat, NDS-OM, which is used for trading of these government securities. There is a platform, NDS-OM, which is operated, which is maintained by CCIL. And for certain number of hours, for certain time period, in the last week, it was found that there was a glitch in the platform, and as a result of this, the trading of government bonds actually came down to half of the average value. Should you remember the value? Not at all required. Should you even remember what was the date, what was the time, etc.? Not at all required. If you want, all the data is there in the article, but not at all relevant for UPSC. What is relevant? One, you should know that government bonds can be traded. Second, the platform name you should remember, which operates the platform, you should remember the name. Now, what is the issue? If there's a glitch, what is the issue? Issue is that government securities first and foremost comprise of majority of the bonds which are traded in the market. I hope you understand this. Various data sets put it at around more than 70% to 75% of the total bonds which are traded in the market, which means you should ensure that there is no glitch, there is no stoppage of the government bonds trading. That's the first point. Second point, many of the banks or many of the financial institutions have plans. What is the meaning of it? Imagine there is a bank and the bank expects a lot of withdrawals of the funds tomorrow or a lot of outflow of the funds from the bank tomorrow. And accordingly, you would have arranged for the sale of government securities, ensuring that there is sufficient liquidity in the banking sector. Now, what if there is an outflow of the funds from the bank, but at the same point of time, there is a glitch in the system, they are unable to sell their G securities in the market? Don't you think that will affect the liability management of a banking sector? So these are very important points. Hence it is important to ensure that there is no glitch in the system runs very efficiently. So that is the first point which is covered in the article here. Second, banks overnight SDF balances are now eligible for LCR, says Reserve Bank of India. What is the point being discussed here? Under Basel III guidelines, I'll write it here. Under Basel III guidelines, we have a ratio called as liquidity coverage ratio, LCR, liquidity coverage ratio. And under the liquidity coverage ratio, a bank has to maintain at least 100%. I'll repeat the statement. At least 100% of the outflow of the funds that the bank will experience for the next 30 days in the form of high quality liquid asset. I'll repeat the statement here. The bank under Basel III has to abide by a liquidity coverage ratio which is set up at 100% now, which means the bank which has estimated, right, how much is the outflow of the funds for the next 30 days should maintain at least 100% of it in the form of high quality liquid assets. Example, cash. Example, G securities. Right, these are the best two examples for high quality liquid assets. Right, what is the importance of this? If there is a requirement of the funds at any point of time, first and foremost, you need not convert cash. First and foremost, you need not convert cash. And second, the G securities are very liquid in the market. At any point of time, you require funds because there is an outflow. You can sell these or pledge these and borrow money. That is the concept of liquidity coverage ratio. And in order to address a confusion, what is the confusion here? Banks raised a question to Reserve Bank of India. That is under the concept of the SDF, Standing Deposit Facility. Under the concept of SDF, Standing Deposit Facility, banks keep certain amount of funds with Reserve Bank of India. I'll repeat, banks will keep certain amount of funds with Reserve Bank of India and borrow from RBI for a shorter duration. Borrow from Reserve Bank of India for shorter duration. Now these funds that, the banks will keep, just make a correction here, banks will keep money with RBI for a short duration and earn interest on it, not borrow, earn interest on this. And this concept of SDF, since its introduction, has replaced the reverse repo rate. Reverse repo rate has become almost useless in today's situation. So I will repeat it, just make a correction here. Under SDF route, the banks will keep funds with RBI, deposits with RBI and earn interest. The confusion that was earlier existing was the banks asked, this money, imagine 100 crore rupees, I have kept it with RBI for a very short duration, let's say 7 days under the SDF. Should I be counting that cash as a part of the high quality liquid assets which I need to maintain because there is a liquidity coverage ratio? And RBI very recently has clarified stating that yes, those deposits that you keep with the Reserve Bank of India under the SDF route, that is a Standing Deposit Facility route, those will also be counted as a part of the high quality liquid assets which you need to maintain under the LCR. So these are the two very important points which are being discussed in the article here. Please make a note of this. Based on this, I have given a question. Consider the following statements. The deposits under SDF are counted as a part of LCR. Statement 1 is correct. The LCR must be less than 100% of the net cash flows for the next 30 days. Statement 2 is wrong. Right option for the question is option A, only 1 is correct. Let me go to the next article here. The PDS to CSEs 212,000 or 2.12 lakh PDS public distribution shops will be recast as a common service centers, CSCs. Now what is the idea here? It's not the first time that this kind of an article has appeared. Even in the last year's discussion, we have covered one such article. That is, in the last year, September 2021, there was an agreement between, have a look at this, Department of Food and Public Distribution and the Ministry of Electronics and Information Technology, METI. And as per this agreement or MOU which was signed between the two authorities, 38,000 PDS have been turned into common service centers. What is the basic idea here? public distribution system, PDS centers are known to be distributing food grains. I hope you understand this. Imagine there is a PDS outlet. What is the duty of the PDS outlets? Whatever food distribution programs have been implemented by the government, for example, National Food Security Act, the beneficiaries will be going to the shop and they will be issued with certain amount of food grains as per their entitlement. Now, for having a distribution or for providing this kind of a distribution services, the government will provide revenues or will provide commission to these shops. Should you remember how much commission is provided? Not required, right? In the article itself it is provided 143 rupees per quintal amount of commission is provided to these shops. But the concern is that this is a function that they are doing, they are earning commission. Why shouldn't we provide more types of facilities through these shops, because already the infrastructure is available, and ensure that the feasibility, or let's say the amount of revenues that these shops can generate to the owners will automatically increase. And keeping that in mind, 2021 this MOU was signed and these 38,000 PDS outlets have been converted into CSEs. And when they become CSCs, common service centers, what is the advantage? Apart from distribution of the food grain, the common service centers will also provide a lot of other types of services such as registrations for Aadhaar, the PAN cards, booking of train tickets, checking of bank balance, etc. And because these are providing such services, they earn a lot of commission based on the services that they have provided. Now, many of you will be basically confused. Sir, why will people use this? Argument is that people, when they go to the shops for getting the food grain, they already are at shops. At that point of time, if they want to check their bank balance, service is available. If they want to book a train ticket, if you want to apply for a PAN card, etc., all those services are readily available at these more than 2 lakh the PDS shops which are going to be recast or converted into common service centers now. Right, so these are certain very important points which are provided in the article, but beyond this, don't worry about NFSA, because certain information about NFSA has been provided multiple times. We have discussed NFSA, and you also must be knowing what are the provisions of NFSA, right, currently. Next, export tax has been scrapped. Central government has withdrawn the export tax on iron ore and steel. Should you remember the names of the products? Not necessary. The concept is simple. Earlier, fearing that the supply of these commodities in the domestic market would become low, the government had imposed export tax. That is, certain tariffs or taxes were imposed on the products of the steel and the iron ore, so that the exports will become very costly and the domestic supply would increase. And now Government of India says there is no more requirement of such taxes, and hence we are withdrawing the taxes that we have already implemented on these products. Now, government expects that with withdrawal of these taxes, the exports would automatically increase, and because the exports of the Indian economy in the recent times have come down, have reduced, this would add to more and more exports of the product, again revive the exports. But having said so, understand the problem here. Many of the experts are saying, even though government has withdrawn the policy, there is very little incentive now, or there is very little to basically come to a conclusion that the exports of these products will increase in the market. Why? There is a concern of recession in majority of the countries with which we are conducting trade. And this point again and again we have been discussing. Please remember this. There is very little, or there is a lot of concern regarding the amount of recession or the amount of contraction will these economies experience, and as a result of this our exports have been affected or have taken a hit. So that would be one reason why suddenly the exports of these products may not increase now. Second, China. In case of China, again there is a surge of the COVID pandemic, and that is affecting the productivity of the Chinese economy, which means again our exports to their economy would be affected. Right? And third, whenever government imposes such a policy, the supply chain would be disrupted. For example, imagine I am an importer sitting in another country, you are an exporter. Government of India imposed a tax on your product and that product became very costly for me. I stopped sourcing the raw material from your country. Now, though Government of India has withdrawn it, suddenly I will not start sourcing the raw material again from you. Why? When I stopped sourcing from you, I would have found an alternative supplier. Already I have established a trade relationship with the alternative supplier. That's the reason the revival will not be very soon. It might take certain time to revive the exports of or to the extent earlier, the exports of iron ore and steel products. So these are certain very important points regarding the article. The last article for today's discussion, Competition Commission of India will be taking over the functions of profiteering watchdog from December 1. In the last couple of years, we have been discussing this issue of National Anti-Profiteering Authority. That is, Government of India back in the year 2017, when they implemented GST, feared that the tax reduction benefits would not completely be transferred to the buyers in the market. And in order to address this issue of profiteering, because government says this is profiteering, that is, imagine Government of India will reduce the tax rates, but the seller will reduce the market prices by a very small margin. For example, if the government reduces the tax rate, let's say by 10%, but the seller will reduce the market price by only 1 rupee, right? So, if you want to understand, imagine the market price was earlier 110, now the government has reduced the tax rate by 10%, which means the amount of taxes, that is GST rate which is paid, is much lower compared to earlier number. But what if the seller will reduce the market price by 50 paisas or 1 rupee or 1.5 rupee, which means he is pocketing majority of the benefit of the tax reduction in the form of profits. And they are transferring very less tax reduction as a benefit to the consumers in the market. This government will call it as profiteering. In order to address the issue of profiteering, Government of India introduced a new system. Although I am using the term Government of India, please understand GST Council here. So they introduced a new system, National Anti-Profiteering Authority, NAA. And this authority was supposed to work only for 2 years and was supposed to wound up, supposed to close after 2 years of the functioning. But in 2017, again a 2-year extension was provided. 2021, again 1 more year of extension was provided. And finally, now with the recommendation of the GST Council, government says National Anti-Profiteering Authority finally will be wound up, will be closed, and whatever functions were done by the anti-profiteering authority, such as investigations, etc., now it will be taken up by Competition Commission of India, CCI, Competition Commission of India. So starting December, it will be the Competition Commission of India which will handle the cases of anti-profiteering, and it will not be a National Anti-Profiteering Authority. So this is just an update. We have been discussing this again and again for the last couple of months. Please update this. So these are the various articles as well as the questions that have been asked in different newspapers for the duration 19th to 25th November 2022. So this is the end of the discussion. If you like the initiative, hit the like button, provide your valuable comments in the section below, and if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly do it now. Thank you. Have a great day.